Hey everybody, welcome back to Taking Trades and happy Monday to you. So what happened with UGAZ today? Did you take any trades on DGAZ? Please jump down in the comments really quick, let me know what you traded and also what you thought of this sizable drop in price action today. So today I'm going to help you pick apart what happened and I'm going to give you some support levels we can look to in order to understand where this drop may turn back around. So in today's episode, we're going to break down the weather forecast via naturalgasweather.com, and then I'm going to give you my analysis of the charts on UGAZ as well as DGAZ and the natural gas futures. And then stay tuned to the end of the video. I got a little treat for you. I'm going to show you a way to trade natural gas without nibbling any shares of UGAZ or DGAZ. In fact, you don't have to own any shares at all to make money doing this. So stay tuned. Let's go. All right, so according to natgasweather.com, a weather storm will track across the east over the next few days, but with showers mainly confined to the coast. It's not a very cold system with lows probably in the 20s to 30s, and then a second weather system will track into California and the interior west midweek, but also this is not going to be very cold. A warm ridge in between these systems will set up over the central U.S. early in the week and then shift over the south and east Wednesday through Friday. A fresh cold shot is coming and will push into the central U.S. late in the week and then into the east next weekend with lows of the 10s to the 30s for swings back to stronger demand. So overall, demand is going to ease to moderate through Friday and then high this coming weekend. So here we go. So now that we've talked a little bit about the weather, why don't we dive into the charts? Let's break things down a little bit. I want to talk about some support levels, some resistance levels, backtrack and look historically what's been happening, what our old levels are, and then we'll go from there as far as formulating a plan for when are we going to turn back to the upside, when is demand going to have an effect, and what are we looking at as far as Thursday in terms of that natural gas report. So let's dive over to the charts real quick. Okay, look what we've got here. We've got the /NGF20. You can see that ticker right here. Type that in, and that's going to give you the natural gas futures for January 2020. That's what we want. And if we come ahead here, you can see we've been looking at all these different levels, these two tops right here. And then today, look at this massive down red candle where we literally opened and then just bled all day long. We almost closed at the very low. The low was 2.603 and our close was at 2.605. So literally started at the top and bled to the bottom and then closed. So let's talk about this. We've got some of our channels. We have our gaps down. We talked about having some possible pinball action, but then we got easing off on demand and we're at moderate as we just talked about, and that led to a lot of dumping to the downside. Now, I've read a couple articles, I've been listening to what some other people have been saying. There's a lot of people talking about nibbling and picking up shares down here. So it's a big candle. You never know what's going to happen the next day. Sometimes you get a pullback like this and then you get kind of a downsided hangover where it might linger a little before people get interested again. So my personal opinion right here is that I'm going to wait till I see what happens tomorrow a little bit just to see if we keep bleeding to the downside, then I'm going to be a little more strategic because, and that brings us to my first topic, which is our support level. If we just briefly kind of look through here, you can see that we've got a little bit of a level, and I'm going to go ahead and just make this line solid so it's a little clearer, and I'm going to make it red. And that level right there, you can see we've had a touch with a big reversal and a touch with a reversal here, and then a lot of candle action around here with sort of a bounce higher. Now, this could be a range. You know, we could draw another line down in here, and we could say, yes, it's not an exact price point, Jimmy. You always tell us that. So follow your own rules. And I would say, okay, that's fair. So here's our support range. I think our support range could fall anywhere between 2.53 and 2.51. So why don't we just call it roughly about 2.50? Seems to be a good spot for a bounce with a return back to the upside in concert with the natural gas report that's coming up on Thursday. So I don't know what's going to happen tomorrow. I don't know if we're just going to bleed back down and start reaching for this level. If we do, then this is my nibble level. This is where I'm going to nibble shares. This is where I would nibble here. This is where I would nibble there. Not telling you to nibble, just saying this is where I nibble. You do your own due diligence and make your own trading decisions based off all collective information, not just my video, not just my opinion. So don't trade based off only my opinion. Now, if we get a return back to the upside and some stabilization, this could present a nibble situation as well because we do have a level here and here. If we get back above it and we're settling in here, that might be a level to go back to the long side. But right now, it's pretty complicated, and I think the underlying fact is that on Thursday, we're likely going to get our first withdrawal. Demand's going to be higher this weekend than it was right now during the week. So we should see some increased demand, increased push back to the upside. So part of me thinks as long as I'm keeping my share size small, I could probably nibble in all of these areas because I'm anticipating a move back to the upside on Thursday after the report. Now, is that a gamble? It could be, except for we are getting closer into winter. Injection season is coming to an end, and we're going to possibly see our first withdrawal. These are all bullish signs for UGAZ back to the upside. So pay close attention to that report on Thursday. But between now and then, my thoughts is I'm going to be possibly nibbling between here and here, trying to pick up a few shares, get into a nice position, and then I would look to sell into the big push if we get it coming on Thursday. Now, I'm going to pop over to UGAZ just so we can look at it, and just because the title of the video was UGAZ tanked, and this is crazy because where UGAZ is right now is showing that it could hit the bottom of this gap. See how this gapped up right here, and we've got sort of this line right here and this line here. That's a gap, and it hasn't been filled yet. And we always talk about how gaps are like vacuums, and they can get filled very quickly. So on UGAZ, I would anticipate that tomorrow we're going to continue and fill this gap. So I personally wouldn't be nibbling before we get to 13.25. If we get to 13.25, for me it's just a small nibble waiting to possibly go lower, because as we can see, we've got another level right here, and this level is right in that 12, I'll call it 1225-ish, 1235-ish, right in there. So we've got a lot of levels to work around in, but we do have a gap, and anytime you get that gap, you can get some quick price movement. So I would be looking to nibble shares at the bottom of the gap, and if we continue, I would then look to nibble shares down here around that 1235 area for setup for Thursday to move back to the north side. Now, real quick, if any of you played DGAZ, stop right now, get to the comments, tell me about it, tell me what kind of profit you took, tell me where you got in and got out. I want to hear the whole story because nicely done. Now, look at this thing. This thing gapped up massively and ran up above this 50 simple moving average, which is incredible. Now, if we do move to the downside, meaning the inverse ETF DGAZ moves to the upside, remember we've got some looming overhead resistance up here where there could be a slight hang up, so watch for that. But DGAZ looked amazing today, and if you were long DGAZ anytime last week and held over the weekend, you were handsomely rewarded today on your shares. So nicely done on the play on DGAZ. So now I'm going to flip back over to our /NGF20 and just want to take one more quick look at that, get a quick zoom out, get a lay of the land here. And it does look like, if we zoom way out, yeah, this is historic lows down here in this zone that we drew. So this is going to be a strong support level, I would anticipate, unless something unexpected happens where, I don't know, we get more storage. For some reason we don't get the withdrawal. You know, maybe this week we work our way down and then we don't get a withdrawal, we will likely go to an all-time low. I don't anticipate that happening, but just being aware of the levels and what can happen. Having a plan is very important for all the different scenarios. So moving forward this week into the report and even beyond the report into the weekend, one thing to consider is anytime that we get a push to the upside, be looking at these resistance levels, and if you see price action slowing into those resistance levels, I would always take a little bit of profit. Maybe it's an eighth of your position, maybe it's a quarter of your position, maybe you're playing it really conservative and you take half your position off. Putting a little money in your pocket helps, because then if you get the pullback, you can take those funds and you can add them back to the game and get more skin in the game as you move back to the upside. So it could be a nibble fest this week. We'll see what happens. I'm going to keep updating you guys on this. It's very exciting. This was a very big drop. I did not see this coming, but we'll keep talking about it, and we'll be looking to Thursday's storage report.
Hey, half of you watching this video aren't subscribed. Jump down below, hit the subscribe button, join us for a week, check out the channel, leave me a comment, introduce yourself. I'd love to hear from you, and the Taking Trade community would love to have you. All right, let's get back to the treat I promised you. All right, I promised you a treat at the end of this video. I told you that I was gonna give you a strategy where you could make some money without buying any shares of UGAZ, any shares of DGAZ. You could just not own anything and still make money. So stay tuned, we're gonna jump in the charts. I want to show that to you right now.
So I have the natural gas futures chart up, but this isn't the chart we want to use. And I'm guessing some of you may have an idea of where I'm going with this. But what we want to do is go over to ticker symbol UNG. Let's go to the United States Natural Gas Fund. It's an ETF. And what I want to talk about is an option strategy. I know we've been talking about options, and I want you to know on the front end that I'm going to put together some options videos for you guys. So today, if you don't fully understand what I'm talking about, just wait. I'm going to have another one coming out, and I'm going to get more in depth on this specific topic. But what we're talking about today is selling a cash covered put. Now, all a put is, for example, say I'm looking at this price action and I think, okay, I don't think that this price action is going to go below $19. And I don't think it'll go below $19 in the next 2 weeks. So I just created a time frame, 2 weeks, and I created a strike price, $19. Now, if I enter this contract and say I don't think it'll go below $19 in 2 weeks, and if it stays above $19 for those 2 weeks and finishes on expiration day above $19, then this contract expires worthless, and I just keep a premium credit. Now this premium credit is based on 100 shares of stock of an ETF of whatever product you're trading. That's one contract. And the first thing I'll say right off is anyone who's trading options, trade very small. Always trade small. As you gain experience, just trade more frequently. Getting big size is where people get into a lot of trouble. So one contract is an amazing place to start because it's the smallest size you can go right out of the gate. So for example, let's look at this. Let's just take our example of the $19 strike. And what I'm going to open up over here under the trade tab in Thinkorswim is the options chain. And I'm going to move myself over here for a second. Now what we're looking at is the options chain, and let's say 2 weeks. Let's call it 18 days from now, okay? So December 6th is what you decided was the expiration date. And $19, like we looked at on the chart, that's our strike price. I don't think it's going to go below $19. So I open this up, and I'm looking in here, and I say, okay, I don't think it's going to go below $19. So there's my strike price. Now, just like a stock, you have a bid and an ask, and this is the put side of the chain. The other side is the call side of the chain. Right now we're dealing with the puts. We're saying, I don't think it'll go lower than a certain level. So if I go ahead in here and I click in here, you'll see that it's going to bring up this level, UNG. I'll change the contracts to 1 because one contract is 100 shares. Now the important thing is about selling cash covered puts or cash secured puts is that you have enough money in your account to cover this for a scenario that I'm going to describe in a second. But right now you can see that if I click the midpoint of this between the bid and the ask, 37 cents is what they're willing to pay me per share to hold this contract. So 37 cents times 100 shares is 37 bucks. Some might say, well, that's not very much. But in all actuality, it's not bad because $37 is greater than the actual price of the stock. So whenever I'm doing this, I try to look to get at least 1% of the stock I'm trading. And we've got that in this case. So I would put this through. I would get paid $37 immediately. And that $37 is now cash in my account that cannot leave. It's now mine no matter what happens, okay? So that's an easy thing for your brain to take in is the minute you get premium, it's yours and they can never take it back from you. So now we go back to the charts. We've already entered the trade. Right here is our strike right at the $19 level. So now if this price action meanders down and goes below the strike and comes back above, or just stays above the whole time, or goes really high, as long as it's above this line on the expiration date, which we decided was going to be December 6th, as long as it's above this line on December 6th, the contract expires worthless, and you just keep the credit. Now let's say it goes below this level and expires. Well then, what you're obligated to do is buy 100 shares of stock from whoever took your contract at $19. So if you get down here to $17 and it expires, you have to buy the stock. You get assigned the stock at $19. So here's the tricky part. You get assigned at 19. So you're saying, oh, I'm down $2 already. Well, actually you're not, because it's $19 minus the credit you received. So you have to take that 37 cents off of your strike price to get your true break-even point. So it gives you a little bit of cushion. So let's say you sold a stock and you got, say you sold a put and you got $1 premium, and it drops below 19 and it goes to 18.50 and it expires and you get assigned the stock. You just bought it at 19, but because you sold $1 premium, your break-even is actually $1 lower at 18. So you're actually green. You're actually green on this trade unless it drops below $18. Now, some people use this strategy as a way to get an entry on an ETF or a stock that they're interested in. So in that case, you can set up a cash secured put and you can put it at a level that you are happy. You say, I'd love to get this ETF at $18. So you could sell an $18 cash secured put and wait to see if you get assigned. If you don't, you keep the credit and you just try it again. And you can keep doing this over and over and over until you get assigned. You may never get assigned, but if you do, you'll have the stock or ETF at a price that you wanted. So I hope this was helpful. It's just an introduction to learning how to put on a cash secured put and what the ins and outs are. Now, if this was kind of confusing, I'm going to make a follow-up video. I'm going to make some more options videos for you guys on covered calls and cash secured puts. So with that, I hope you were green and we'll see you tomorrow.